Okay, welcome for the weekly outlook on the Nasdaq. Today we're going to be using the dealing range from the Friday 10th of October's low up to the Thursday 30th of October's high. And the reason for this is because this is the high that takes out buy side, and this is the low that takes out sell side. Not the extreme sell side, but the internal sell side, which is still valid to be a dealing range. Now, if we look at the quadrant levels here, we can get some gauges on discount and premium and narrative. Now, I get a lot of questions pretty much every single day. Someone asks me this at least one time. How do you form a narrative? And quadrant levels, dealing ranges, and daily wick levels, those are all very, very good ways of looking for things that provide a narrative. So when we talk about this today, understand that everything I'm referring to in terms of a narrative, it's being derived from quadrant levels, PD arrays, liquidity concepts, and just basic understanding of where the market is going to go based on what it's done in the past and what its characteristics are. Okay, so from here we've got a breakaway gap. This is a fair value gap that is just not reached into. That's all the breakaway gap means. It creates the gap, fails to take it, rallies higher. Wednesday does take this high, but it doesn't trade into the breakaway gap, and then we fail to take the gap, stays below the upper quadrant. That's important, and we'll come to that in a moment. And then it breaks lower again. Doesn't give us a market structure shift because there's no low that we can use as a market structure shift. But what does it give us? It gives us this change state of delivery, and it inverts this fair value gap. This fair value gap is being drawn to this low instead of this one because there's a volume imbalance or a new day opening gap. We've traded down through it, we're displaced, we've closed below this candle's low, and we haven't traded back up into this yet. Then Friday comes around and we trade all the way down lower below this candle low, and then it rallies all the way back up. It leaves this trailing wick. We'll be using these wick levels in a moment. Trades up into the low here, and then what does it do? It closes a little bit lower. So how regularly we may say, because we've left a very long wick, we can have a short-term bullish bias. I wouldn't do that this week because, well, we'll come into it in a moment. But long story short, I'm going to be bearish. Now, leaving the inversion fair value gap alone and just completely displacing through it, that's best case scenario. Why? Well, what else is this? Just down close candle. It's a breakaway gap. So we've got an inversion fair value gap, as well started as a BISI, trades all the way through, completely disrespected by price, no respect on this daily chart, just displaces all the way through. Okay, and then Friday doesn't trade back into that gap, but it creates a new one. Now, I want to see this left as a breakaway gap if we're going to be bearish, because it would just leave us with a lot stronger of a price run lower. So it would signify weakness, similar to what we saw up here. We had this breakaway gap initially. It fails to trade into it, stays below the upper quadrant. That's weakness. That's strong weakness. Why? Well, if we have a breakaway gap and we don't trade into it and then we trade lower, break down lower, that's already weakness. Top that off with the fact that we failed to trade into the breakaway gap, plus we failed to reach the upper quadrant. So if it's so bearish that it's reluctant to even trade into an inefficiency that it normally should trade into, because remember, this is an inefficiency. The market's always seeking to balance inefficiencies and to absorb liquidity. Well, in this case, if that was the dynamics of the marketplace, it fails to do that because it's so bearish. That's the narrative of how we use these strength and weakness indications. You can literally personify price into human-like characteristics. It's so bearish that it fails to take out or to reach into this breakaway gap. It's reluctant to reach into a premium array. It's so bearish it's just going to want to drop. Strong, it trades through this BISI, so it's so bearish it doesn't even have the chance to respect this BISI. It completely inverts it, displaces all the way through it, and it fails because it's so bearish to trade back into it. See what I'm doing? I'm personifying price, and that, believe it or not, it does help you build a narrative on how prices can behave and what it's likely to do next. It does. It really does. And when you're journaling, that's exactly how you should be writing things down in your journal. Okay, now for the draw on liquidity. We've got a very, very, very large liquidity void here. This was created from when Trump announced that he's going to tariff China, and then over the weekend he said he's no longer going to do it. It's a 354 handle liquidity void, or new week opening gap. I'm referring to the entire thing as a liquidity void, just like I would refer to a fair value gap being the entire fair value gap, even if it's traded into. Now, technically, the void aspect of this is only here. This is the only void aspect. But initially, it was created like that. So when this void in liquidity was first created, and the reason it's a void in liquidity is because there's no delivery from this low into this low. So this candle's closing price on Friday, the 10th of October, there's no delivery here at all, price delivery, there's no orders booked at all until Monday 13th of October at 24,544.5. So in between these two price points, there's no orders being booked. So this is a complete void in liquidity. It's attracting to price now. So the reason we're seeing this run lower is because we have this liquidity void. This is a draw on liquidity. Now what's below it, we also have this sell side liquidity pool. If you're looking at your chart and it looks different, you may want to toggle this setting at the bottom right, settlement. This will give you different prices. It'll use the 414 regular trading hours closing price instead of the 6 or the 5 p.m. closing price. So make sure you have this toggled off, because if you have it toggled on, it's going to give you some messed up projections. Now you can use both, and it can be useful sometimes to get extra information, but I don't even bother with that. It's not important to me. So the liquidity void aspect of this is only this point here. So this is technically what's drawing price in terms of unmitigated liquidity void. But just like we would refer to a fair value gap, even if a fair value gap has been traded into, we would refer to the entire thing as a fair value gap. That's what I'm doing here. So this is a liquidity void, and it's in the form of a new week opening gap. A liquidity void attracts price because there's no orders at it. I want to see us on Monday. I'm not predicting whether we're going to gap open higher or lower. If we gap lower, and depending on how much we gap lower, I would like to see us use some of these quadrant levels to trade lower. Just keep using these to trade lower, and then eventually draw into the liquidity void for the coming week. If we gap higher, I would want to see us use this wick or the SIBI here, plus the equilibrium level of the dealing range. I think there's enough premium raise that really, if you're looking for sells, it shouldn't trade above this here, this point, because that's the bearish order block. So if it's going to be bearish, why should it not trade above? Well, we have a SIBI, an inversion gap that's bearish, the equilibrium of the dealing range, and this bearish order block. So that's basically 3 or 4 lines of defense, depending on if you consider the dealing range a line of defense. I wouldn't want to see a trade up here now, because we've already put in this swing point. We've already done that. I don't see a need for us to trade up into this and turtle soup it using breakaway gap and then trade lower, because we've already done work back in the upper quadrant level. There's no reason for us to trade back into this. And really, if you're being strict, it shouldn't even trade into equilibrium of this. So really, the protected price level would be this equilibrium or mean threshold of the bearish order block, because it's protected by the inversion gap and the SIBI. So, okay, moving down into a 4-hour chart, and you'll notice that I'm doing most of these weekly outlooks on the daily chart. When you're doing your own weekly and daily analysis, that's what you should be doing. You should be spending the majority of the time on that daily chart and then working your way lower to see reasons to support a daily bias. Okay, so we've got the new week opening gap from last week. This is the difference in between the settlement price on Friday and the opening price on Sunday. That new week opening gap, what's aligned with it, was the equilibrium of the dealing range. So I want to see us be very, very sensitive to this level. We've already traded into it. I'm not opposed to trading back up into it again on Monday if we gap higher, but I do want to see it used as a resistance level. I don't really want to see us overshoot it by much. We can into this bounce price range here, but it shouldn't be very sustained delivery. So if we do trade higher, because I'm bearish, I would look at it as a suspect rally. I wouldn't be confident in seeing it keep trading higher. I would want to see it act as resistance and then see candles start closing lower than the new week opening gap again on the 4-hour chart. And then ideally we leave long wicks, short bodies that close lower, and then, you know, be it Monday, Tuesday, Wednesday, I'd want to see it start distributing the weekly range. Now, regarding the economic calendar, we don't really have any high impact news on Monday or Tuesday, so maybe Monday will be a bit more of a consolidation. Tuesday, the classic buy day setup may occur, but you may want to look for that in Asia instead of London. Wednesday, we have FOMC meeting minutes, so we can potentially see consolidation early morning, and then the PM session starts to distribute the majority of the daily range. So Wednesday is going to be a day that you want to do a lot more of your work in the PM. It's not that you can't trade the AM. It's perfectly fine to trade the AM pre-market London. It's just you just want to reserve your expectations that the majority of the daily range is probably going to distribute in the later portion of the day. Thursday we've got a bunch of high impact as well, so Thursday will be a large range day. Friday we've got flash services PMI. This isn't always like a massive news candle. Sometimes it's very underwhelming, but occasionally it can be a little large. So if you're in a position at that time on Friday, just you know be careful that you're not going to be completely manipulated out of your position by news and gapped out. So the later portion of the week is going to be where the majority of the daily range is going to get distributed. So I'm not really too concerned about Monday and Tuesday. I'm going to be doing intraday setups on these days. I wouldn't really look for super long setups. I'd want to do, pre-market model, still bullets, maybe a classic buy day if you're confident in the daily range because Monday is very obvious. But really, Monday and Tuesday are going to be giving us the information that we need for Wednesday, Thursday, and Friday. It doesn't mean you can't trade these 2 days. I think every single day of the week is actually a tradable day. But, reserve your weekly range expectations for the later half of the week. Now, of course, as always, that's not concrete. Things can change. Sometimes Monday, even though it's no news, can be, catastrophic and massive. So if that would occur, then you'd reserve your expectations for the rest of the week. But based on the economic calendar, just off this, we can see in advance that just based off where the high impact news events are, the majority of the weekly range's distribution is going to occur in the later half of the week, Wednesday, Thursday, and Friday. Okay, that's going to be it for the weekly outlook in Trading Camp. Hopefully you've come away with something. Hopefully it benefits your trading this week. And I'll see you again in Monday live stream. Thank you for watching and goodbye.